Hey everyone, welcome back to Corporate Decoder. Today, the advisors Inner Circle Fund III just filed its semi-annual shareholder report for March 2026, and I'm seeing some interesting sector bets and top holdings that tell a story. Quick note, this is not financial advice, just my take on public filings for educational purposes. This report gives us a snapshot of where these funds are investing their money, and it reveals some clear favorites in the market. Let's dive into what these investment funds are actually buying and holding. This section breaks down where the money is allocated by industry. Looking at the Brown Advisory Flexible Equity ETF Information Technology is the biggest slice of the pie, taking up almost 25% of the total net assets. That is a huge bet on tech. Right behind that is financials at 23%. This fund seems to be leaning heavily into growth sectors. For the Brown Advisory Flexible Equity ETF, the total net assets are a whopping $1.47 billion, with 43 holdings. The advisory fees paid were about $3.6 million. The portfolio turnover rate, which is how often they buy and sell, is pretty low at 6%. This indicates a more buy and hold strategy for this particular fund. Now, let's see who is actually in that tech and financial sector. The top holding is Taiwan Semiconductor Manufacturing ADTA, followed closely by Microsoft and Amazon.com.meta platforms, and Visa also make the top 10. It is a real who is who of big tech and finance giants. This tells us they are very confident in these established, large companies. Moving to the Brown Advisory Sustainable Growth ETF, here we see a more concentrated bet. Information technology is an even bigger portion of this fund, at 45%. That is a massive allocation. Financials also feature heavily at over 15%. This fund is clearly focused on technology companies that meet certain sustainability criteria. This fund has total net assets of over $423 million, with 33 holdings. They paid out about $1.4 million in advisory fees. The portfolio turnover rate here is higher at 19%, suggesting they might be a bit more active in managing this portfolio compared to the flexible equity fund. The top holdings here are also tech-heavy, with NVIDIA leading the pack, followed by Microsoft and Amazon.com.Broadcom, and Visa round out the top 5. It's clear that even within a sustainable theme, the strategy is still very much focused on the dominant players in the tech world. Now, let's look at the Brown Advisory Sustainable Value ETF. This fund has a more diversified approach across sectors compared to the Sustainable Growth ETF. Healthcare is the largest sector at over 21%, followed by financials at 15% and information technology at just over 12%. They also have a notable slice in industrials. This fund has total net assets of $329 million with 42 holdings. The advisory fees paid were approximately $827,000. The portfolio turnover rate is 14%, which is moderate. Interestingly, the top holdings here are more geared towards healthcare and financials, with Sanofi, ADTA, Cardinal Health, and SLB appearing prominently. Willis Towers Watson and AG are also in the top list. This fund seems to be finding value in companies that might be considered more traditional or less growth focused than the tech giants we saw earlier. Taking a look at the Brown Advisory International Value Select ETF, this fund focuses on international markets. The top country allocations include the United Kingdom at nearly 20%, followed by Japan at 15% and Germany at 14%. France and the Netherlands also have significant weightings. This fund is definitely looking for opportunities outside of the United States. This fund has total net assets of $70 million with 53 holdings. Advisory fees paid out were about $21,000. The portfolio turnover rate is low at 2%, suggesting a very long-term buy and hold strategy for international investments. It is important to note that this ETF only commenced operations on the 25th of February 2026, so it is very new. The top holdings in this international fund include companies like Brenntag, Icon, and Sanofi AD-DA. The list also features a mix of companies from various industries and countries. Now, let's dig into the financial statements themselves. These are the nuts and bolts that really show the financial health and performance of these funds. Looking at the schedule of investments for the Brown Advisory Flexible Equity ETF, we can see the actual holdings. For example, Alphabet Class A shares are valued at over $55 million. Meta Platforms Class A shares are valued at over $62 million. These are substantial positions. The total common stock for the Flexible Equity ETF is valued at over $1.4 billion, with a cost basis of over $1 billion. This shows a significant unrealized gain. The accompanying notes are an integral part of the financial statements. For the Brown Advisory Sustainable Growth ETF, we see similar large positions in tech. Microsoft shares are valued at over $30 million and NVIDIA shares are valued at over $35 million. These are substantial investments. The total common stock for the Sustainable Growth ETF is valued at over $410 million, with a cost basis of over $371 million. This also indicates strong unrealized gains. Percentages are based on net assets of $423,233. The Brown Advisory Sustainable Value ETF shows its holdings as well. For instance, Sanofi ADR is valued at over $13 million. Citigroup holdings are valued at over $9 million. This fund shows a more spread out investment across different sectors. The total common stock for the Sustainable Value ETF is valued at over $311 million, with a cost basis of over $296 million. For the International Value Select ETF, we see holdings like British American Tobacco, ADR valued at almost $2 million and AIB Group at over $1.6 million. The overall value of common stock here is over $69 million, with a cost basis of about $73 million, showing a slight unrealized loss, perhaps due to the recent start of operations. These statements give us a snapshot of the fund's financial position at a specific point in time. For the Brown Advisory Flexible Equity ETF on the 31st of March 2026, the total assets were over $1.49 billion. This includes investments valued at over $1.42 billion. Payable to investment advisor were over $600,000. The net assets for the flexible equity ETF stood at $1.476 billion. This is the ultimate value of the fund belonging to shareholders. The Brown Advisory Sustainable Growth ETF had total assets of over $433 million. Their total liabilities were just over $10 million. The net assets for the Sustainable Growth ETF were just over $423 million. The Brown Advisory Sustainable Value ETF reported total assets of over $338 million. Its net assets were just over $329 million. And for the Brown Advisory International Value Select ETF, total assets were about $73 million. The net assets for this international fund were just over $70 million. This statement shows the income and expenses over a period, essentially telling us how the fund performed operationally. For the 6 months ended the 31st of March 2026, the Flexible Equity ETF generated over $7.9 million in total investment income. Its total expenses after waivers were about $4 million, leading to net investment income of nearly $4 million. Less waiver of investment advisory fees were over $130,000. However, this fund saw a significant net realized loss on investments of over $70 million, and the net change in unrealized appreciation was also negative over $100 million. This resulted in a substantial net decrease in net assets from operations of over $167 million for this period. The Sustainable Growth ETF brought in over $2.3 million in investment income. Its expenses after waivers were about $1.5 million. Net realized gain was positive at over $4.3 million. However, they also saw a large unrealized depreciation of over $137 million, resulting in a net decrease in net assets from operations of over $132 million. The Sustainable Value ETF had investment income of over $2.2 million. Expenses after waivers were about $930,000. It reported a net realized loss of over $1.8 million and a significant unrealized appreciation of nearly $10 million. This led to a net decrease in net assets from operations of over $10 million. For the International Value Select ETF, since it just started operations, the numbers are much smaller. It had investment income of $322,000. Expenses were only $26,000. It experienced a net realized loss of $50,000 and an unrealized depreciation of over $3 million, resulting in a net decrease in net assets of about $3.1 million. These highlights give us per S-hair data and ratios, which are super useful for comparing performance. For the Flexible Equity ETF, the portfolio turnover rate was quite low at 6% for the 6 months ended the 31st of March 2026. This confirms that they were not actively trading much. Ratio of expenses to average net assets was 0.54%. The Sustainable Growth ETF had a higher turnover rate of 19% for the same period. Ratio of expenses to average net assets was 0.61%. The Sustainable Value ETF had a 14% turnover rate. Ratio of expenses to average net assets was 0.71%. The International Value Select ETF showed a very low turnover rate of 2%. This is understandable given its recent start and focus on value. Ratio of expenses to average net assets was 0.60% and was annualized. These notes are key for understanding the details behind the numbers. Here they explain how they value their investments, which is crucial. They use the market value for listed securities, and for those without readily available prices, they use fair value procedures. They also detail their hierarchy for fair value level 1, which is quoted prices in active markets, level 2 for observable inputs, and level 3 for unobservable ones. As of the 31st of March 2026, all investments were classified as level 1, meaning they are valued using readily available market prices, which is generally a good sign for liquidity and transparency. The funds plan to qualify as regulated investment companies, meaning they generally avoid paying federal income taxes if they distribute their earnings. This means the tax burden falls on the investor. This section details the fees paid to the investment advisor, Brown Advisory LLC, and the sub-advisor, Vidant Asset Management. For the flexible equity ETF, the advisory fee is 0.50%. For the sustainable growth ETF, it is 0.58%. For the sustainable value ETF, it is 0.67%. And for the International Value Select ETF, it is 0.55%. They also mention expense limitation agreements, which cap the total operating expenses for some of the funds. For example, the flexible equity ETF has a contractual expense limit of 0.54%. This part explains how the Board of Trustees approved the advisory and sub-advisory agreements. They reviewed detailed information about the services, personnel, operations, fees compared to peers, and compliance programs of both Brown Advisory and Vidant Asset Management. The process involved extensive review and deliberation, ultimately concluding that the agreements and fees were fair and reasonable. This section outlines the different risks investors are exposed to. It covers risks like equity risk, ETF risks, such as trading risk, foreign company risk, and management risk. For growth-focused funds, there is growth investment style risk, and for value-focused funds, value style risk. They also mention risks related to specific investment vehicles like REITs and smaller or medium-sized companies. This is a large sector for two of the funds. A big driver for the gains or losses in tech stocks would be interest rate sensitivity, inflation impacting consumer spending, and geopolitical events that could disrupt supply chains. The fact that these funds are heavily invested in tech points to a bullish outlook on the sector's ability to weather these storms. Looking at the financials, the flexible equity ETF reported a net realized loss of over $70 million. This is quite significant and suggests they may have been selling some holdings at a loss, possibly to manage cash flow or rebalance the portfolio. This loss is a major factor in the decrease in net assets for that fund. The large negative unrealized appreciation, especially in the tech-heavy funds, indicates that the market value of their holdings has decreased during the reporting period. Combined with realized losses, this points to a challenging market environment for some of their core investments. Overall, the advisor's Inner Circle Fund, the third's filings show a clear strategic focus, particularly in the tech sector for two of its ETFs, Brown Advisory Flexible Equity and Brown Advisory Sustainable Growth, while the Sustainable Value ETF offers a more diversified approach, and the International Value Select ETF looks to global markets. The substantial investments in major tech players suggest a strong conviction in the long-term prospects of these companies. The large unrealized appreciation across these funds indicates the market has been tough in the recent period. The low portfolio turnover in some of these funds suggests a long-term investment horizon, a strategy that could pay off if these big bets on established companies prove successful over time. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives.